Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 20, 2022. Let's talk about NIO. As many of you know, NIO is also called as Chinese Tesla. It's a great electric vehicle play. As you can see here, they got a cool looking NIO car here. They are really trying to build beautiful, efficient cars and really capturing the market. So with that, let's jump in and look at a few more details here. We'll talk about company overview and look at the competitive landscape. And also let's look at a few charts, deep dive, and also look at the financial summary and see who is doing really well. And we'll compare some of the competitors here, see who is on top, from a Chinese automakers and also a few USA automakers. And then we'll do a final verdict. Can you buy NIO here? Can you buy some other stocks? So with that, let's go into more details. All right, as you can see here, we got NIO cars. Look, cool looking cars here: ET5, ET7, EC6, ES7, and even the SUV. As you can see here, two SUV models. Very cool looking cars. They're expanding. They're also improving their manufacturing facilities, and all these supply chain problems. This company is really going after it and resolving many of the supply chain constraints and making sure they got the supply available to produce great looking efficient cars. So with that, let's go into a few more details here. So as you can see here, we got the leader here. We got Mr. Bin Lee. He's the founder and chairman, and he's been there for in the company for a long time. I love companies with the CEO and the co-founder. The founder at the helm is a great way to be relevant in the industry. They got skin in the game, as we say. And as you see here, we got 97% of employees who are approving the CEO here. That tells you something about the leadership here. Looks like Bin Lee is committed. He wants to make the company successful. He's also good toward the employees. And as you see here, we got a co-founder or the founder at the helm here. I always love when the founder is at the helm. That's a great one here. And as you scan through his history here, he had been in the auto industry for a long time. He co-founded Bit Auto, as you can see here, and he was also in various other companies in the past here. So from a history perspective, it checks out. He knows what's going on. He was also vice chairman of China Automobile Dealers Association. So it looks like he's got auto industry under control here. He has been in this space for a long time. So from a leadership perspective, it checks out here. We got a young dynamic leader here with Bin Lee. He's also a founder. I think it checks out. He's a great guy to lead the company here. All right, so as you look through here, we got a few more details. NIO, or we can call it Chinese Tesla. As you see here, they design, develop, and manufacture smart EVs in China. And they got various types of cars. As you see here, 5, 6, 7-seater SUVs. And they're not just into cars, they also sell powertrains, battery packs, and components. And they also have the charging stations, swapping services, and battery. I think they are everywhere. They are like Chinese Tesla here. They're not only into electric vehicle making, they're into electric parts, batteries, charging station, you name it, they're there. And as you see here, stock price is around $28. Very, very, very depressed at these levels here. And market cap is around $45 billion or so. So as you scan through the company stock chart here, look, stock chart has came drastically down off late here. Its peak was sometimes in January 2021. It hit around $65 or so, as you can see here. But now there is a huge decline, as you see here. And as you scan through here, it's still a strong buy here. As you see here, there is an 8 buy rating on the stock here and 1 hold rating. So still a very strong buy here, even after this big drop. And as you see here, we got it's one of the 5 growth stocks that can make you rich, according to Motley Fool here. And there is a 5% growth prediction that can galvanize NIO here. They have nice growth prediction, as you can see here, 50%. And as you see here, it outpaces stock market gains and has strong catalysts. As you see here, a lot of positive news, but at the present time, stock is not responding. That's why it's a good time to really look at NIO. With a lot of strong fundamentals here, company doing the right thing, strong leader at the helm, we should really take a look at this company and slowly acquire a good position here. And now let's look at the new targets and projections. As you see here, right now stock price is around $28. The low projection is around 37, nicely above current stock price, and the high projection is around 87. So this is for next 12 months, as you can see here. So I think probably the middle projection here 59 could be a little more realistic here. So I would say next say 1 to 2 year it can easily hit $59, provided Chinese premier is it's a little bit easy on Chinese stocks here. That's one thing, wild card on the China. There is a leadership here, leadership on China. They can whip the crack, whip anybody quickly. So that's one thing to watch out for. Barring that, barring Chinese government intervention, I can see the stock going higher, at least to $60 level here within say 12 to 24 months. And as you see here from a technical perspective, right now it's a sell. So I think that's why stock is depressed at these levels. Anytime NIO stock is below 30, call me a buyer. It's a great one to accumulate. I've been accumulating, below 30. It's a good one to slowly accumulate. They will do very well long term. As you all know, there's a good tailwind. EV sales are rising, and even China, they want to be, very good, efficient from a climate perspective and green perspective. That's why NIO stock can go higher. It's one of the strongest player in China. I think that will continue as we go forward. All right, so let's look at competitive landscape here and see what's going on. And before we go into competitive landscape, look, we got from a ETF perspective, it's very good to look at the ETFs or exchange traded funds. It will tell you where the industry is going. As you see here at the top of the list, we got lithium here. The batteries are doing well. Look, there is a very good increase or price performance. Battery up 18% for 1 year and 5 year nice 235% and 10 year 193%. As you all know, the lithium batteries is really the heart and foundation of EV, and I think that's going nicely. And NIO is a big player in the EV battery market, so it's got both EV as well as EV battery. That's why it's a good one. And as you scan through here, we got autonomous driving here, and that's also doing nicely. Right now, in 1 year, it did 13%, as you see here, and NIO also plays into this EV sector. And as you say, scan through, we got here ARC, which is Cathy Wood's ETF here. They've done nicely in 5 years. Again, autonomous technology here, which is, NIO is part of this one too. So at the high level, as you scan through the ETFs to see what's going on, broader market, you can clearly see in the long run, battery and EV, they are the emerging trends here. NIO plays into this, so that's why it's a good play into electric vehicle market. Let's go into some more details and look at the industry peers for NIO. As you scan through here, we got industry peers, and NIO is right in the middle, as you can see here. And look at the top, we got few companies. They don't have too much history. It's a little bit newer companies, as you see here. And many of these companies have been making news. You have heard RIVN roaring higher and coming back down. We got Arrival. Again, it's a SPAC merger, as many of you know. And we got Lucid making some big news. All these companies don't have too much history behind it. Not too much fundamentals, as you can see here. But if you have to look at one or two, I would say better way to look at them could be, you could look at how are they doing financially. For example, HYZN, just $4 stock here, market cap is around $1 billion. Look, they got a nice Altman Z score that tells you financially they are stable here. You don't need to worry too much. So that could be a good one here. And also we got RIVN. RIVN is also okay from Altman Z score perspective. They're also doing well. You could buy them also into weakness here. Arrival is good too. And even PTRA is a good one. And Lucid, as we scan through here, they also have a nice 28 as a Altman Z score. They're not going to go bankrupt. They're also doing very well. And they've done nicely from 52-week low, as you see here. So overall, if you look at some of these players here and go after stronger candidates, you could look at stocks like Tesla here. Tesla is a great steady eddy, as many of you know here, and Tesla always performs nicely. Look, even this big company, it's hitting about $1 trillion market cap, as you see here. It's done nicely. It's done very good for 1 year, 21%, as you see here. 5-year great performance. You could still look at that one here. And you could also look at Ford here. Ford, as many of you know, it's electrifying and really competing effectively with Tesla here with their Ford pickup, which is electrified. Look, Ford has done nice performance here in 5-year, 1 year, nice performance. It's really reinventing the wheel here. And then you got Indian company here, Tata Motors, as many of you might be knowing. It's also doing very well, as you can see here. Nice performance in 1 year, as well as 6 months. It's improving, as you can see here. And then you got a few more players as you scan through here. Look, we got Chinese companies like XPEV here and Lee. They're also doing well. So I would say even you could look at these companies here, and they seem to be doing pretty okay here. They're growing nicely. You could buy them also into the weakness here. And we got few more players at the bottom here who are not doing great. We got Nikola, Candy, Solo, Workhorse, all doing not great here. And as you look through some of these companies here, look, Nikola here, or Lordstown Motors here, their financials are not great here. That's why they get a low Altman Z score. There is some little bit issue on the financial side of the house. It's a potential candidate for any financial meltdown here, or can lead into bankruptcy given its low Altman Z score. On the other hand, we got Workhorse, we got Solo. They are doing okay. They got good Altman Z score. They're not going to go out of business anytime soon here. And same is the story with Nikola. They got good Altman Z score, which is okay here. So with that, let's go into a little more detail on some of these companies here and look at NIO in a little more detail. As you see here, we got a stock chart here. Look, NIO, it's up and down. Stock came down big time, went up, as you can see here, went up higher, came down. It's a really lively stock here. If you're a trader, you love this company. You kind of buy them when they're down like right now, and it will go up nicely. If you're a long-term investor, you should invest when the stock tanks big time like right now here, and it will do very well with all the secular growth prospect of this auto and EV here. This will do well. Right now on the balance volume is pretty steady, as you can see here. It's consolidating. So I think at this time it's good to buy some NIO, especially given RSI is low, tells you stock is completely sold off here. And look, we got Li Auto here. Li Auto is trading sideways for most part. Look, there is a nice channel here. So it's also a good player. I like this company also. This has got nice on the balance volume here. Folks are buying the stock even though stock is trading sideways and lower. So this is also great play here. Look, RSI is 45. That tells the stock is sold off here. So I'd be a buyer of Li also here. And then got XPEV, again a Chinese name here. Stock is coming down off late, as you can see here. On the balance volume is going higher. This is also a good one. Stock is sold off. RSI is 44 here. And then you got Fisker, which is a United States based company here. Look, stock is selling off here. On the balance volume is pretty steady. You could buy this one also. Look, it's completely sold off here with RSI very low. It's 29. So you could buy Fisker also slowly at these levels here. And then we got a few more as you see here. We got RIVN. RIVN as you see here after this big hype here, it's coming down to earth as you see here. At the same time, on the balance volume, it's also going lower. So I say if you really like RIVN, they got also Amazon partnership, as many of you know. You could slowly start buying, nibbling a little bit, buy slowly, small quantities that will serve you well. Don't buy a huge position here because as you see here, trend is down right now. On the balance volume, it's also going down, but you could slowly buy a couple of stocks here and there on the down days. That should serve you really well. And then you got Lucid here. Look, stock went up higher. Now it's coming down nicely. On the balance volume is pretty stable here. So I say, whenever you see this type of chart here, stock is coming down. On the balance volume is steady. RSI tells you there is some momentum here. You could slowly pick up some Lucid on the down days. That will do very well. And then you got here Tesla. Tesla is a great stock here. Look, RSI is 44. Stock is sold off. It's also in a tight trading channel, as you can see here. And on the balance volume is pretty steady here. You could also buy Tesla on down days and accumulate slowly. This will do very well under leadership of Mr. Elon Musk. And then we got here Ford. Ford has been on a nice move here, as you see. Right now it's coming down with all this downturn here. And on the balance volume is pretty steady. I say anytime Ford drops like this year or with RSI, below 50 or at 50, you could slowly buy some Ford. I say, on the down days. So that way, you kind of have some safety net here. It's a great one to play. They will do very well as we go forward. And then we got a few more as you see here. Look, we got Tata Motors, Indian company. Nice surge here. Now it's again trying to go higher. Right now RSI is 59, which is little high for me. On the balance volume is steady. I would be waiting for a little pullback here. I would not be buying at the top here. And same story with the TSLA. Stock was shot up here. High RSI. I would wait for a little pullback here. And NKLA, as you see here, it's completely down. It's pulled back nicely. RSI is low. And even on the balance volume is low. I would say if you like this company, buy slowly here. I don't see too much movement here, but it's a good one for maybe a little bit longer term, not a short term play here. And then you got here PTRA. Stock is going down, down, down. As you see here, on the balance volume is also down. This is again a long term play, but not for any swing trading type opportunity here. So with that, let's go into NIO and do a quick deep dive. As you see here, NIO, their earnings per share, it's a negative right now, but it's improving on a yearly basis. So I like it when revenue earnings per share improves, even though it's negative. So it's a good trend. That's good. And from an annual sales perspective, I like this clip here. Look, it's going up nicely. That's a very good trend. And shares outstanding, there is some increase here. They're diluting shares slightly, but with a nice revenue increase here, this is not a concern for me at the present time. And quarterly earnings, nice clip here. I love the clip. They're doing nicely here. And they're also spending money on R&D. As you can see here, nice upswing in the R&D spending. That's always good. Companies focusing on the product and great technology and the car. And then you got quarterly income here. Right now they're losing money, as you can see here. That's why Wall Street does not like the company at the present time, because they're losing big time here. But this will improve as we go forward. Right now with all the supply chain constraint, they have to spend a little more money, and also their R&D spending, as you see here. I think this will stabilize. They're also expanding right now and investing in the network, manufacturing, and scaling their operations. That's why you see the net income dropping at this time, but this will improve and it will give more capacity for the company. So overall, I like the trend here, even though Wall Street does not like this company short term because it's losing money. Long term, it's a great play. Now let's look at the quarterly earning and see what's going on here. As you see here from a quarterly earning perspective and overall quarterly performance, look, it was a $2 billion company back in 2019. Now it's a $45 billion company. clearly this company is taking the market share and growing nicely. Will it go up and down? Yes, it was a $74 billion company back in 12/31/2020. Now it's 45. It's got fluctuations, but if you buy them when they're down, like right now, you can do a nice profit. And as you see here, from a quarterly stock performance perspective, if you're holding this stock for last 2 quarters, I know you have the pain here. You are a bag holder, as they call it. But if you hold it for longer term, I think you'll be doing okay. Look, they're down for 2 quarters continuously here. So I think at this time, it's a good time to slowly buy and hold and go from there. Historically, whenever they're down big time here, huge big down quarter came up nicely, down quarter came up nicely here, nice 3 quarter upswing here. Right now we got 2 quarter down here, and this can also go and they can do well and have a nice upswing as we go forward as economy stabilizes. And from a sales perspective, nice clip. I love the sales here. They're improving the sales nicely. That's good. Top line is growing. It's a growth company. And they're also surprising Wall Street with positive surprise, as you can see here. That's good. Wall Street loves positive surprise when it comes to sales. From an earnings per share perspective, they're in line. They're not surprising. Company not making money at this time, which is okay at the present time. Even though Wall Street does not like this. Wall Street likes a positive earnings, but this company does not have positive earnings. That's why it's a little bit difficult time right now at the present. And from a cash perspective, these guys, NIO has a lot of cash, as you can see here. It's not a concern. Company is not going to go out of business anytime soon. They got some debt, which is completely manageable. Debt to equity is 0.8, a little high, but it's completely manageable here. Free cash flow negative, as you can see here. And nice gross margin. As you see here, gross margin is improving. That's good here. And net margin and the operating margin all negative here. I think Wall Street does not like this one at the present time because they're expanding and growing. They're not showing any profit margin yet. And good R&D spend. I love this clip here. They're doing well. And from an ROE and ROA perspective, it's negative right now. I like this to be double-digit positive, but right now we are not there yet. And from a price to sales perspective, not too pricey at the present time here. I think its valuation is right. You could slowly buy here. It's a great company, EV play. I think they will do well long term. All right, now let's look at what's going on in the market here. Let's look at the charts and look at the daily price movement here. As you see here from a daily price movement perspective, last 20 days or so, stock is kind of mainly down, as you see here, and we've got some up days but mainly down, and the volume is very respectable. Look, around $30 billion or even more. Stock is going down last 2 days. Volume is around 33 million shares traded, and target price is I think around the same. It's around 58. Not significant change here. And look what's happening to the shorts here. Short ratio was around 4.99 for a while. It's increasing slowly. It was 4.78, as you see here, for a while. And it increased from 4.78 to 4.99, as you see here. Now it's going up from 4.99 to 5.47. So that tells you short sellers are, slowly but surely building their short position here. They're trying to push the stock lower. That's what's going on in the short term here. And as you see here, stock is down. For 1 year, they're down 50% so far. And it's really short sellers trying to push the stock down, along with this market rotation away from high growth names and companies that are not having any positive earnings yet. That's what's going on. But it's a respectable market cap here, and even market cap, as you see here, it was a $60 billion market cap just back in 12-13 December timeframe, and now it's a $40 billion. $20 billion or so shaved from the market cap. That tells you currently in the short term it's going through some pain here, but long term it's a good play here. And let's look at the stock chart here to understand what's going on. So as you look through the stock chart here, stock went up nicely in 2020. As you see here, nice upswing. I like this clip here. great upswing here. And now what's going on here in 2021, after hitting all-time high of 66 here, came down nicely and again came down here. Now it's below its 100-week moving average. It's a weekly 5-year chart as you see here, and it's trying to stabilize as you see here. At the present time, you could buy some NIO and accumulate, especially if you're a long-term buyer. You could buy some and accumulate. Great founder-led company. And as you look through here, we got a daily chart of NIO. Look on a daily chart perspective, stock is trading sideways right now. Nice trading pattern here, and it's actually going down as you see here. And momentum is stabilizing here. RSI is stabilizing right now. It's a very low RSI 40. That tells you good time stock is sold off here. From a DMI perspective, red line is going higher and blue line is going lower here. That tells you right now it's negative it's a bearish from a trend perspective. That's when we slowly accumulate a position here for long-term play. On the balance, volume is trading sideways here. Check-in money flow is also coming down, which happens when the stock market comes down here. Check-in money also comes down, which is very normal here. Look, huge drop here. Check-in money also dropped here, then picked up and started going higher. That's why I think it's a good one to buy. Right now it's bearish. It's good to initiate a position here. All right, now let's look at option chain. As you look through option chain here, stock price is around $63. All-time high is, $28. All-time high is $64. And if you look at the, 30 strike price here, we got a lot of open interest here. A lot of people are, trading and buying call options here. That's a very good amount here. And if you look at $35, that's a very big amount. Contract size here, 9,800. It's good to know. As you go higher in the strike price here, I see nice open interest here. That tells you in the options market, folks are betting the stock will go higher and buying the call options even at higher strike price. As you see here, all the strike price here 30 and higher, all the strike price tells you folks are buying call options at the higher strike price and they want the stock to go higher. And if you see here on the put side of the house, there is also some open interest here, but it's nowhere close to the total open interest on the call side. As you scan through here, even though some numbers are high here, folks are hedging. As you see here, 28,000 here. In some strike price it's higher, but overall it's not high. So now let's look at option statistics to see that a little more clearly. As you look through here from an option statistic perspective, total call options traded 259,000, total put options traded 99,000. That makes the put call ratio around 0.38. That's overly bullish here. That tells you more people are buying call options and they want the stock to go higher, and that's why it's bullish at this time in the options market. And as you look through here, let's rank some of these companies and see who is on the top here. So it's an eye chart. We'll quickly go through this here. As you see here, we got NIO on top. It's a strong buy rating, from analysts. That's a good one here. And look, NIO net margin is negative. That's why Wall Street does not like it at the present time. And they got nice projection for the future here. They got nice growth projection of 117% revenue growth and a yearly 102% revenue growth projection. That's very good here. And from a financial perspective, nice Altman Z score here. Company is stable. It's not going to go out of business here. And nice Piotrowski F score here. The higher the better. That's telling you financials are improving. I like the score above 5. And they got good financial, nice growth grade from Morningstar here, and overall rating is highest among the Chinese companies here. So that's why it's a winner when it comes to Chinese stock here. It's a good long-term play. And as you see here, mainly stock is coming down because net margin negative. Company is not making money. That's what's going on here. Down nicely from 52-week high as you see here. And then you got a few more Chinese plays. We'll not go through in detail. You got Li, XPEV, both are Chinese companies, as many of you know here. Look at the overall rating. They are rated lower compared to NIO here. That's why, even though I like these two companies, NIO is rated very highly. It's a more diversified, well-rounded company compared to Lee and XPEV. And then you got few more here. We got Fisker, gets a very low rating as you see here, just 6 here. And financials are poor for Fisker as you see here. Altman Z score is 2.6, which is okay, but not great. I like the ones, maybe above 3 or so, but 2.6 is not too bad here. And then you got few more here. Lucid gets a 9 here, and they're okay from a financial health as you see here. They got good Altman Z score. It can survive, so you could buy this one also into the weakness here. And Workhorse has got a little bit higher score here as you see here, and they also have a nice Altman Z score which is positive. You could look at this one also here. And Tesla has a great highest grade here, 82. They got a nice financial grade from Morningstar, which is B here, and nice growth grade, which is a B, and F grade in the profitability here. And even Ford is doing great, 48 score here. They're a steady Eddie play here. You could buy that one too. So overall, if you're looking for a Chinese stock in the EV sector, look no further. Your good choice is NIO. You could buy some NIO here. If you're looking for a US companies, go after Tesla, Ford, or even Workhorse. That will also work here. And if you're a speculative player, you could go after Lucid, which has got a little bit higher overall rating here. So with that, you might wonder, what should I do now with my NIO? So as you see here, NIO, they got a nice delivery here. That they're delivering more and more cars. I like that here. They set a new quarterly record for delivery here, and they have a growth of 102% car deliveries, year over year. That's an impressive feat. I think they're doing very well from a car delivery. I think that's the way to go here. And the total revenue also increased nicely here, 116% year over year. That tells you top line growth is improving nicely, and they're also improving the overall production capacity here. This is very much needed for especially electric vehicle makers. This expansion capacity that can really help them to really scale their operations. So that's a very good expansion here. I like it. And they have this order momentum here. Order book is growing here. It's very strong, so I like the order flow also here. It's good to know they have an all-time high order as of October, when they announced last quarter. And gross margin is improving here. It's at 20% right now. It's increased from 18%. That's also a good trend here. And they have made a lot of strides in the supply chain team here. Supply chain team is working through and making sure they secure all the supply chain components here. So that's a very good one here. They're working through the supply chain issues. And it's now a rear view mirror issue here, not a major concern. So with that overall, I recommend buying NIO here. Also Chinese Tesla on pullbacks. You could buy some right now at these levels, and buy on pullbacks. You will do very well. So with that, thank you very much. Happy investing and trading. Please subscribe.